Every single month, your county takes money from you. Not quietly, not secretly. They send you a bill, and you pay it. You have paid it for decades. You paid it when you were working. You paid it when the kids were in school. You paid it when your income was strong and the bills felt manageable. And you are still paying it now. In retirement. On a fixed income. With no raise coming. No adjustment. No end in sight. But here is what nobody from your county assessor's office has ever called to tell you. 4 million of American homeowners aged 65 and older. The law already decided you should be paying significantly less. In some cases, the law decided you should not be paying at all. Not a proposal. Not something being debated in Congress. Actual law. Existing right now. In your state. Possibly in your county. And according to AARP Foundation, out of the more than 9.3 million older adults who are eligible for property tax relief in this country, only 8% have ever applied. Let that land for a moment. 9.3 million seniors qualify. Fewer than 1 in 10 have claimed what they are legally entitled to. The other 9 out of 10 are still writing the same check. Every year. Without ever knowing they had a choice. That is not an accident. That is how the system was designed. The same office that calculates what you owe has absolutely no legal obligation to tell you about the discount you qualify for. None. They will calculate your full tax bill, send it to your door, and wait. If you pay it, they keep it. Every dollar. Every year. For as long as you live in that home. If you are 65 or older and you own your home, what you are about to hear in the next few minutes may be the most important financial information you have come across in years. Because the money is already there. It was set aside for you. It has been waiting. The only question is whether you are going to go and get it. The first thing most seniors do not understand is that property tax relief for older Americans comes in 3 completely different forms, and you may qualify for more than one of them at the same time. The first form is an exemption. This is where your home's taxable assessed value is reduced by a fixed dollar amount before your tax rate is applied. Think of it as the government saying, this portion of your home's value simply does not count when we calculate what you owe. The savings are direct. They lower your bill by real dollars every single year. The second form is an assessment freeze. This is arguably the most powerful protection available to senior homeowners, and almost nobody knows it exists. A freeze legally locks the taxable value of your home at whatever it was assessed at when you first qualified. It does not matter how much the market rises. It does not matter if your neighborhood doubles in value. Your taxable base stays exactly where it was frozen. Your neighbors who have not qualified for a freeze watch their bills climb every year as home values increase. Yours stays the same. The third form is a deferral program. This allows qualifying seniors to stop paying property taxes entirely while they live in the home. The taxes accumulate as a lien against the property and are paid from the estate when the home is sold or transferred. For seniors in serious financial difficulty, this program is a lifeline that most have never been told about. Now here is where it becomes genuinely alarming for most people watching this. Every single state in the United States offers at least one of these programs. Every state. And the numbers involved are not trivial. In Florida, the standard homestead exemption reduces your taxable value by $50,000. But for homeowners aged 65 and older with income below approximately $37,000, most Florida counties add a second senior exemption on top of that, another $50,000. That is a combined $100,000 reduction in your home's taxable value. At Florida's average property tax rate, that translates to roughly $1,000 to $1,500 in annual savings. That disappears if you never apply. In Texas, voters approved a constitutional amendment in November 2025 that increased the over 65 school district exemption from $10,000 to $60,000. Combined with the existing $140,000 general homestead exemption, qualifying Texas seniors can now shield up to $200,000 of their home's value from school district taxes. And critically, once you qualify in Texas, your school taxes are permanently frozen. They cannot increase even if your home's value rises significantly. But in Texas, as in every other state, this protection is not automatic. You must apply. Right now, More than 1.1 million Texas seniors are estimated to be at risk of overpaying because they have not filed for the exemption that was already written into law for them. In New York, the Enhanced STAR program reduces the school tax portion of your property bill for homeowners aged 65 and older with income below $110,750 in 2026. The school tax savings typically run between $1,500 and $3,500 per year depending on the school district. In New York City's outer boroughs and Long Island, where property taxes are among the highest in the country, those numbers go even higher. In New Jersey, a program called the Senior Freeze, recently restructured under a new single application called PAS, one effective January 2026, reimburses qualifying seniors for any property tax increase above their base year amount. Income must be below approximately $150,000 to qualify. For long-term homeowners in New Jersey, where property taxes are the highest in the nation, this program could be worth thousands of dollars annually. And yet the majority of eligible seniors in New Jersey have still never filed the application. In Ohio, legislation now provides homeowners aged 65 and older who have lived in their homes for 25 years or more with an exemption worth up to $250,000 on the property's assessed value. Income limits apply and localities must opt in, but for qualifying seniors, the potential savings are extraordinary. In South Carolina, homeowners aged 65 and older receive an additional $50,000 exemption on top of the regular homestead exemption, providing a combined $100,000 total reduction. In Arizona, qualifying seniors aged 65 and older can have their property's assessed value frozen for 3 years at a time under the Senior Value Protection Program, preventing the kind of year-over-year tax increases that have devastated fixed-income retirees in high-growth markets across the state. And here is something that stops most people cold when they find out. Many states intentionally exclude Social Security income from the calculation used to determine eligibility for these programs. That means if Social Security makes up most or all of your income, your qualifying income on paper may actually be far lower than the money hitting your bank account. Thousands of seniors who assumed they made too much to qualify have been walking away from programs they were actually eligible for all along. The Lincoln Institute of Land Policy has studied this for years. Their research consistently shows the same finding. A large portion of seniors who are not enrolled in property tax relief programs are not enrolled simply because they assumed they would not qualify. They never checked. They never called. They never applied. And the county never told them to. Now here is the part that should make you genuinely angry. The application deadline in most states falls between January 1st and April 1st of the year you first qualify, typically the year you turn 65. Miss that window and you lose the exemption for the entire tax year. In most states, there is no going back. There is no retroactive recovery. The money you overpaid stays with the county, which means for every year that has passed since you turned 65 without claiming your exemption, that is a year of overpayment that is permanently gone. Let us put a real number to that. At an average property tax rate of 1.1%, which is the national average according to recent data, on a home assessed at $300,000, your annual property tax bill is approximately $3,300. A senior exemption that reduces your taxable value by $75,000 would lower that bill by around $825 per year. A full assessment freeze in a market where home values have risen 20% over 5 years could be saving you 2 to 3 times that amount. If you have been eligible for 5 years and never applied, you have overpaid between $4,000 and $10,000 or more depending on your state, your county, and your home value. That money did not go toward something that helped you. It went into a county budget that had no legal obligation to flag your overpayment. There are also several specific mistakes that wipe out eligibility, and seniors make them constantly without realizing it. Adding an adult child to the deed of your home can trigger a reassessment and in some states immediately disqualify you from senior exemption programs. This happens frequently when aging parents add a child's name for estate planning purposes without consulting a tax professional. The result is a reassessment, a higher tax bill, and the loss of the senior protection they had been counting on. Missing the annual recertification requirement is another one. Some programs require you to refile each year to maintain your benefit. Seniors who qualified, received their exemption, and then simply assumed it continued automatically have been dropped from programs without warning, and in most cases, recovery is not available. And perhaps the most common mistake of all, relying on the assessor's office to apply your exemption automatically. They will not. Absent a filed application, you pay full tax. It does not matter how long you have lived there. It does not matter how obvious your eligibility appears to be. Without an application on file, you are treated as a full-paying property owner indefinitely. Here is what you need to do right now, today, before this video ends. Go to your state's official Department of Revenue or Department of Taxation website. Search for the words Senior Property Tax Exemption, along with your state name. You are looking for the official state program page, not a third-party site, not a law firm, not an advertisement. The official government page. From there you will find the specific programs available in your state, the income and age requirements, the application form, and the deadline. In many states, you can download the application, complete it at home, and mail it directly to your county assessor. If you are unsure of your county assessor's contact information, a simple search of your county name plus assessor's office will bring it up immediately. Call them directly. Tell them you are 65 or older, you own your home, and you want to know every senior property tax exemption, freeze, or deferral program available to you. Ask them what documentation you need. Ask them what the deadline is. That is the entire process. One phone call. One application. Potentially thousands of dollars in savings every single year, and in some states, a permanent freeze on a bill that would otherwise increase for the rest of your life. The programs exist. The funding exists. The law has already been written in your favor. What has not happened yet is you asking for it. There is a reason most seniors never find out about this until it is almost too late. The system that benefits from your overpayment has no incentive to correct it. County governments collect the full tax bill on every property where no exemption has been filed. They operate legally. They operate honestly. But they do not volunteer information that reduces their revenue. That is not a conspiracy. That is simply how bureaucratic self-preservation works. The seniors who are paying less, often dramatically less, than their neighbors on nearly identical homes are not the ones who waited for a letter to arrive. They are the ones who went looking. You have spent decades building equity in your home. You have paid taxes on it for your entire adult life. The law now says a portion of that burden belongs to the government, not to you. The only thing standing between you and that money is a single application that most people reading this have never filed. Do not leave it on the table for another year. This video is for educational and informational purposes only and does not constitute financial, tax, or legal advice. Eligibility for property tax exemptions, freezes, and deferral programs varies by state, county, income level, and individual circumstances. Always verify current program requirements directly with your state's Department of Revenue or county assessor's office before filing. Deadlines and income thresholds change annually.